Welcome back to Investing Talk Podcast.
Today, we're looking at a company that has effectively pulled off a magic trick. We are diving into Immunitybio.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really, really helps us out. Now, looking at the notes, you're calling this a commercial inflection point. That sounds, a little bit like consultant speak for, we hope we make money someday.
It does sound like jargon, doesn't it? But I mean, in this specific case, it's really the only way to describe what's happened. We are looking at a biotech that has completely shapeshifted.
Shapeshifted how?
Well, for years, Immunitybio was, a science project, just spending cash, running trials, hoping the biology works out. But as of right now, February 19th, 2026, they've morphed into a commercial engine that is generating serious, tangible cash.
Okay, so we've gone from test tubes to actual bank deposits. Give me the scale of this. How big is the jump we're talking about?
We are looking at a 700% year-over-year revenue explosion.
700.
Yeah.
That's not a typo.
Not a typo. They went from basically nothing, a pre-revenue company, to generating massive growth almost overnight. And the context here is everything. It is Thursday, February 19th. Just yesterday, we got massive news out of Europe that completely redraws the map for this company. So the timing for this couldn't be better.
You definitely have my attention. I mean, 700% growth is rare in tech, let alone biotech, where everything usually moves at the speed of a government committee. So let's get under the hood. Let's talk fundamentals. Where is this money coming from?
So the preliminary numbers for 2025, they show revenue hitting about $113 million. And just to give you a sense of the violence of that move, in 2024, they brought in just under $15 million.
So that's almost a 10x multiplier in just 12 months.
Exactly. And the driver for this isn't some one-off thing. It's a single powerful engine called ANKTVIA. It's their immunotherapy for a specific kind of bladder cancer, NMIBC. It hit the U.S. market, doctors started using it, and the uptake has just been vertical.
Okay, I have to jump in and be the skeptic here immediately. I'm looking at the rest of the P&L, and while that top line is incredible, the bottom line looks bloody. Their operating margins are negative 347%. They lost nearly $350 million in 2024. How do you square commercial success with losing $333 million?
And that's the right question. It's honestly where most investors get tripped up with this name. You have to separate the cost of running the whole company from the cost of making the actual drug.
You mean operating margin versus gross margin?
Precisely. The operating margin, that includes everything. R&D for future drugs, marketing, salaries, keeping the lights on, that's where they're burning the cash.
Right.
But the gross margin, which is just what it costs them to make the drug versus what they sell it for, is 99.6%.
Wait, say that again? 99.6. That's like a software company margin, not a drug company.
It's better than most software companies, actually. It costs them practically pennies on the dollar to manufacture the therapy once the initial science is done. So the argument here is that the huge operating loss isn't a broken business model. It's a deliberate, aggressive investment.
So they're building the pipes, basically. Yeah. Spending a ton of money now to build the infrastructure.
Exactly. They're building the pipes, the factories, the distribution, and the water that's going to flow through those pipes is almost pure profit. And, if you look closer, those net losses actually improved by almost 30% from 2023. So the revenue is growing so fast, it's already starting to plug the hole.
Okay, fair enough. So let's talk about their ability to fund that spending. You mentioned a fortress balance sheet, but then I see this metric that it looks scary. The negative debt-to-equity ratio of negative 156%. I mean, usually when I see negative and debt in the same sentence, I run for the hills. What's going on?
I know, it looks terrifying on a spreadsheet, right? But in this very specific case, a negative debt-to-equity is actually a huge green flag. It's just a quirk of how the math works. It means they hold significantly more cash than they do debt.
Ah, okay. So the negative is actually a surplus. They're cash positive.
Massively cash positive. The sector median is 0%. Immunitybio is sitting at negative 156. It means they're rich with cash. They don't have to keep going back to the market to dilute shareholders just to keep the lights on, which is a constant problem in biotech.
That is a critical distinction. So they have the fuel. But let's talk about the plane itself, the product, ANKTVIA. Why is it selling so well? Is it good marketing or is it actually good science?
Oh, the science is the whole story. We scored their moat of 47 out of 100, which we call a narrow moat, but it's a very, very sturdy one because it's based on just pure clinical efficacy.
So walk us through it. What's the problem ANKTVIA is solving?
So this type of bladder cancer, NMIBC, the standard treatment is a therapy called BCG. But for a lot of patients, BCG stops working. The cancer comes back. And at that point, historically, the next step is just surgically removing the entire bladder.
Which is obviously a life-altering traumatic surgery.
Devastating. So the holy grail has been finding a drug that can save the bladder when BCG fails. And that's exactly where Immunitybio comes in.
Okay, so what's the data look like?
The key number that gets doctors to pay attention is the survival rate. For this group of patients where BCG has failed, Immunitybio is showing a 96% 3-year survival rate.
96%? That seems incredibly high for any cancer drug.
It's basically unheard of for this indication. Because of that, they got first-in-class status. And crucially, this gives them regulatory exclusivity for over 12 years.
So a competitor can't just swoop in next year with a copycat drug.
Nope. They have a decade-plus runway where they own this specific market. The moat is narrow because it's just this one cancer right now, but it is very, very deep.
A fortress within a niche. Okay, that makes sense. Let's pivot from the science and the balance sheet to the charts. Let's talk technicals, because it seems like the stock price is finally starting to reflect all this.
Waking up is an understatement. The stock is absolutely sprinting. We're trading around $6.92 right now, mid-Feb 2026. Just a few days ago, it was at $6.27. So that's a 10% plus move in just a handful of days.
And looking at the chart, it's just been relentless. Green day after green day.
It's actually been a perfect streak. The stock has climbed on literally every single trading day of 2026 so far. It hasn't had a single down day this year.
That's the textbook definition of momentum.
Yeah.
And psychologically, that kind of streak forces the hand of, not just retail traders with FOMO, but big institutions that are underweight. We have to chase it.
Exactly. We're seeing a huge breakout from a long consolidation, and the volume confirms it. This isn't just a low-volume drift. The volume is really high, which tells you big money, big funds are stepping in and building positions.
Which is what you want to see for a sustainable move. High volume on a breakout usually means it has legs.
Right. And speaking of what's driving that volume, let's transition to sentiment. Because this price move is all about the news flow. You said yesterday was a big day. Yesterday, February 18th, was a landmark day for the company. The European Commission granted conditional marketing authorization for Immunitybio.
Okay, so what does that mean in plain English, just that they can sell it there now?
It's bigger than that. It's the first immunotherapy for this specific cancer ever approved in Europe. It opens up a multi-billion-dollar market, essentially overnight. Yesterday, Immunitybio was a U.S. story. Today, it is a global one.
And that second approval from a major body like the EMA, that validates the science all over again, doesn't it?
Correct. It totally removes the binary risk of regulatory failure in the world's second largest market. And it wasn't just Europe.
Right. There was news out of the Middle East just a day before that.
Yep. On the 17th, they announced talks with the Saudi Food and Drug Authority, the SFDA. And this is interesting because of a supply chain issue.
Supply chain issue.
Yes. The Middle East is facing a huge shortage of that older drug, BCG. They're literally running out. So Immunitybio isn't just going to them saying, hey, we have a new drug. They're saying, hey, we have a better alternative, and we can solve your shortage crisis.
That changes the whole conversation. It gives them massive leverage.
It really does. It accelerates the whole timeline.
So with all this news, what are the analysts saying? I saw a note from D. Boral Capital.
Yeah, they came out and reiterated their buy rating, but the thing that made everyone's jaw drop was the price target.
$24.
$24.
And we're trading at, what, $6.92? So a $24 target is an upside of, what is that, 247%?
That's the math. It's a shocking number, but if you start to model in the European revenue and the potential for the Middle East, you can actually build a case for it. It's aggressive, but it's not insane.
So the whole story is changing. The consensus is shifting big time. From a show-me science project to a high-conviction commercial growth story. The sentiment is strongly bullish.
All right, I need to pour some cold water on this.
Yeah.
It's time for the bear case. Let's dig into the risks, because you don't get 250% potential upside without some serious landmines.
Oh, absolutely not. There are significant risks here.
Risk number one has to be that cash burn. We touched on it. A $350 million net loss. Yes, they have cash, but if that revenue growth stalls for any reason, that cash pile disappears. fast.
It's a huge risk. The whole bull case rests on something we call the operating leverage inflection. They have to get revenue up to around 400 or 500 million a year. If they can do that, those 99% gross margins take over and they become a cash machine.
But if they stall out at, say, 200
They
million,
stay in the red, and if they stay in the red too long, they have to raise more money, and that means dilution for shareholders.
Right.
It's a race. They've built the shoes for a giant, and now they have to grow into them.
okay, risk number 2, clinical execution. ANKT-TIVA works in bladder cancer. Great. But that $24 price target assumes it works in other cancers too. Lung cancer, lymphoma.
Correct. The market is pricing this as a platform drug, but we don't have that data yet. A failed phase 2 trial in lung cancer or some unexpected side effect.
And the whole growth story just collapses. Stock would get crushed.
Instantly. The market hates clinical disappointment more than anything.
And risk number 3, the giants. Merck, Bristol-Myers Squibb, Roche. These guys are behemoths. What happens if Merck decides to throw $1 billion at a competing drug?
It's the classic David versus Goliath story. Big Pharma has deeper pockets, deeper sales teams. They can try to squeeze Immunitybio out. That's why that 12-year exclusivity is so incredibly important. It gives them a head start. But they have to execute flawlessly on this rollout.
So definitely not a slam dunk.
Yeah.
Real execution risk.
It's not a savings bond, that's for sure. It's a high-growth, high-volatility biotech.
Okay, we've covered the good, the bad, the ugly. Let's move to the verdict. You've crunched all the numbers. What's the final score?
Taking everything into account, the incredible efficacy data, the 700% growth, the EU approval, but balancing that against the very real cash burn and clinical risks, I'm giving Immunitybio a bullish score of 8.5 out of 10.
And 8.5 is very high for us. So what's the thesis for the next 12 months?
The thesis is that this is a multi-catalyst trade. You're not just buying it based on what's already happened. You're buying it for the dominoes that are about to fall over the next 12 to 18 months.
What are those dominoes?
First, you've got Q4 earnings coming up soon. That should confirm that 113 million revenue number. Then, probably in Q2, we get the Saudi approval. That opens another tab. All while the EU rollout is gaining steam.
And there's a macro wind at their back too, isn't there?
Yes. Money is rotating back into biotech, but investors are being picky. They want companies that are already selling things, not just burning cash in a lab. Immunitybio fits that profile perfectly now.
So final outlook.
The re-rating is underway. The market is just now waking up to the fact that this is a growth company, not just a spec bio. That $24 target from the analyst. It's aggressive, but for the first time, you can actually see a clear path to get there.
High risk because of that burn rate,
Yeah.
but massive reward if they can bridge that gap to profitability. You just don't see a company pivot this hard, this fast, very often.
Exactly. It's one of the most compelling stories in the entire sector right now.
Well, there you have it. An in-depth look at a company trying to cure cancer and maybe make a lot of money doing it. Thanks for breaking all that down.
Thanks for listening to this look at Immunitybio.
And for all of you listening, make sure to subscribe, like, and comment to this video to support the show. We'll see you on the next one.